Ed Yardeni is with us, President at Yardeni Research. Ed, good morning. Good to have you with us here, as always, on the program. Uh, all is well, Ed? I mean, we saw a bit of a reversal on Friday in the U.S., right? I mean, the headline was strong, and then everyone thought the detail was weaker. So which one is it, and what did you make of it?
Well, I think the economy is fine. The labor market's still quite tight. There's still plenty of job openings. I think the weakness in the stock market really was more of a technical development. We've had a huge run up on semiconductor stocks, and they were due for a bit of a correction. And we saw that NVIDIA was down by over 5%. Some technology companies, some semiconductor companies mentioned that things weren't as spectacular as they seem to be for NVIDIA. But I think there was simply some profit taking at the end of the week. Meanwhile, in a couple of weeks, we're going to have in San Jose, California, a big festival sponsored by NVIDIA to show off everything that artificial intelligence might be able to do. So I don't see this market really selling off much more in the face of what will probably be a fairly exciting convention by NVIDIA.
Yeah, okay, that's going to be an interesting one, right? But how are you feeling about emerging markets like India now, Ed? Because the going has been good so far, but at the moment we're also seeing some signs of correction in the broader markets, the mid and small caps. Would you be cautious, after the run-up that we've seen?
Sure. Yeah, I think India's had an extraordinary run, and some profit taking there is probably advisable. But I think the long-term prospects remain quite bright for India. You know, I think when you look at emerging markets, when global investors look at emerging markets, they realize that China is in a recession. I know their data doesn't necessarily confirm that, but certainly the weakness in their stock market over the past couple of years, the government's attempt to stabilize the economy and particularly the stock market, all suggest that the property market bust really is depressing China. And in turn, that's depressing global commodity prices, which isn't very good for countries like Brazil. On the other hand, countries that import commodities like India get a benefit from all that. So I think that's been another reason why India's outperformed. China would have done fine if it wasn't for the fact that they've got a property bubble that's burst.
Hi, Ed. Good morning. Good to see you. And on the S&P 500 from the October lows, I think that market's up 1,000 points. And you have told us in the past you expected to go to around that 5,400 odd mark. So the global setup looks pretty okay, going by what you're telling us. But for India and for other emerging markets, the dollar index is going to be crucial as well. And that's cooled off a little bit. It gave us that feeling that maybe it's going to go past the 105 level. It's cooled off to around 102.5, which is great news. How do you see that one behaving?
Well, I think a lot is going to be determined by the market's perception of what the Federal Reserve is going to do. And I think there's still an expectation, especially after Powell's testimony in Congress, that he said that, we're not far off from lowering interest rates. That seems to be the story he's telling. I think that they are actually going to turn out to be so much further off than Powell was indicating. I think they have to be concerned about speculative excesses in the financial markets. And if the economy continues to do well, all that really means that the unemployment rate stays below 4%, and it's been below 4% for 25 months in a row now, and inflation continues to come down. Why mess with success? Why lower interest rates? Why rush to do that? And I think there's going to be some pushback from some of the other members of the Federal Open Market Committee, and I think there'll be, I don't expect to see more than 2 rate cuts later this year. And there's a case to be made for no rate cuts at all. If that's the case, then the dollar's not going down.
So case to be made for no rate cuts at all as well. And you don't see more than 2 rate cuts this year. So just to summarize, when it comes to the Indian markets, you continue to be bullish. You don't believe that there is any major correction coming through anytime soon, right? This could be a stable up move that could continue despite having big events like the elections upon us.
I'll be honest with you. I'm not great at calling corrections. I think it's a tough game to play. And if you call it well and call the top, you also have to call the bottom in a correction. And people who get top sometimes forget to tell you to get back in. I think you stay with the market. I think you invest in good quality names. I think broadening out to some of the mid-cap, smaller and mid-cap stocks makes sense in the Indian market. The Indian market's very reminiscent, similar to what we're seeing in the United States. A very strong bull market led by a few stocks. And then at some point, the market broadens out, which I think both markets are starting to do.
All right, we'll leave it at that, Ed. Thanks a lot for joining in. Appreciate your thoughts. Let's